Good evening. You're welcome to Crypto Pulse Weekly. Um, I'm trying to accept guys coming in. Yeah, I'm trying to accept guys coming in from Zoom. So you're welcome to Crypto Pulse Weekly with Dr. Davey. Nice to have you. Um, I think, okay, yeah, I've accepted those guys. So good evening once again. I've just started streaming on YouTube and I have folks on Instagram. Yingzi, I can see you. I see Jinadu AT and T-Banky. You're welcome on board. So usually what we have every week on Friday is this session we call Crypto Pulse Weekly. And what we basically do is we'll run through what's going on in the markets for the week or in the past week. We'll talk about the interpretation of it and what it means to an ordinary observer or an investor. Then we go through what I call crypto vital signs, which are basically like technical or fundamental analysis of Bitcoin, because Bitcoin is like the reserve currency of crypto. And then we'll talk about crypto drip, which is basically a knowledge sharing session. Then we'll go through Q&A. So as I said earlier on, for the benefit of those who's joining for the first time, I'll go through a lot of some crypto basics today, just so that people will have less questions at the end of the session. So let's hit the ground running. For market updates, I mean, I don't think it's any news for anybody that's been watching the markets to know that we've had significant crash in the markets this week. I wouldn't say I'm totally surprised because you expect that in the last 100 days running to a US election, you expect some significant bull markets. And for you to have that bull market, you need to have had a prior correction. So what we're having now is the, if you will, the storm before the storm or the storm before the calm, whichever we want to say. But it's basically to correct for the bull run we're going to have till the end of October. Like I told everyone, I think last week or a week before, by the time it's first day in November or the first 3 days in November, the market will probably be at an all-time high or be making some crazy highs, and that's across board: stock market, crypto, currency markets, forex, commodities. They will be at an all-time high, and the reason being that the result of the elections are usually priced into the markets way ahead. So by the time we get to the night of the results or the end of the election, which is November 4th, the market is going to dump anyways. And that happens for almost any big news. And the reason is that the institutional investors try to hedge themselves against any loss. So they pump the market in advance. Then when the news comes out, they just sell off. So now, depending on what the outcome of the news is, they can start, buying back, or they will have set limit orders to buy back, or they just, have a massive sell-off, a subsequent sell-off. I'm able to tell you this because I used to trade forex markets for over 10 years, and I used to try to trade the news, and I was always getting burnt until I figured out why I was always getting burnt, and that was the reason. Institutional traders are always, they always have the leverage, they always have the advantage, and they will always use the advantage. So it's no news that the market crashed this week. I will explain in details some of the reasons why we experienced the crash across the other markets. But for Bitcoin, it's the lowest drop in the last 7 weeks. Coming from where we know, we're coming from below 9K US dollars to getting up to 12,004. I thought that was significant. And if you look back to 2017, 2018, 12,000 has always been, the 12,000 region has always been a significant support or resistance level. I remember somebody saying something to me on Twitter about 3 days ago, saying, can we see what he's seeing? That it looks like the market is trying to take a support on the descending trend line from 2018. And everyone was like, no, there's no way it's going to be a support, that the market is going to fall through. And that's exactly what happened. The market fell through, and we're where we are now. But I think in addition to that, the market also crashed because earlier in the week, we had some news from companies that track blockchain transactions saying that miners were attempting, or not attempting, miners were sending out Bitcoins from their wallets to the exchanges. And what that means, they were increasing the supply on the exchanges. So it was imminent that the market was going to get a drop. And as I said earlier on, if you've been following over the last 3 years, you find out that more and more companies are joining mining activities and are creating infrastructure to mine on a very large scale. So when you see, quote and unquote, a constellation of stars, you know that something's about to happen. You're about to have a meteor shower, or when you see the clouds, you know it's about to rain. So in essence, the drop this week is largely due to, one, as I mentioned, the impending bull run that leads up to the US election. Two, the long-standing resistance at 12,000. If you remember very well, in 2017, before the market broke out to make the all-time high of almost 20,000, it stayed a long time at 12,000. So in the same way, we're having that long-term resistance now. Now having people, miners increasing supply, selling off some of their mined Bitcoin, and then you have a strong dollar due to job numbers and a number of other things. That contributed to the drop. And lastly, because as you already know, some people already know, the stock market is now closely correlated with the cryptocurrency market, because institutional investors are now beginning to put big money down into cryptos. So when the stock market crashes, like the stock market crashed in March, basically what happened was when the stock market crashed, the institutional investors pulled their money out of crypto to fill their positions in the stock market. I'll try to explain that in a layman's term as much as possible. So what happens is institutional investors take positions at different levels of the market. So let's take Tesla stock. Institutional investor will have bought Tesla stock when it was, let's say, 200. They're not going to sell it. So they have the ones they bought since 200. They're never going to sell those ones. Then they have another set that they brought at 300, 350, 400. Then they have some that they buy on a weekly and a monthly basis that they buy and sell off on a short term. So they have different compartments for those ones. When they foresee that the market is going to crash, they have algorithms and, based on news, they can sell off their long positions. When they sell off their long positions, if they have enough liquidity to cover off, the market stabilizes on other impacted markets like crypto. If they don't have enough liquidity, they immediately take their crypto assets and plug the hole in the stock market so that they don't need to exit their position at a loss. So essentially, they use the crypto market as a hedge against the stock market, and that's what's happened. That was what happened in March, when it was that February, March, when COVID started and the stock market crashed. When the stock market crashed, the guys just moved all their money that they had invested in crypto, just moved it into stock to stabilize their position. And when the market recovered, they took it back and brought it back into crypto. As at the beginning of January, the market had gained 90 billion US dollars, crypto markets, before that crash. And from the moment of that crash, I think it dropped to like 200. It dropped like 120 billion during that crash, the cryptocurrency market. It started recovering faster than the stock market. But what I'm saying is the institutional traders are now involved in cryptocurrencies. So you will see this kind of movements from time to time. But there's nothing to worry about. As I will tell you later, we're still in the bull run. In fact, we're just getting warmed up, to be honest. So a correction is a very healthy development on the market. If you think about, two rams that are trying to fight, before they eventually lock horns and knock themselves at incredible speed, they usually go back. The reason they go back is because they're trying to gather inertia and create momentum for themselves. So if the market does not retrace, you don't have enough momentum when you have an ongoing trend. So the ongoing trend right now in the crypto market is that of a bull market, meaning the prices are going up. But for the price to shoot up higher, especially when it can't shoot beyond a particular level, you need to have what you call a correction, which is like Yoruba people will say, like the bull that takes a reverse position before he strikes. So in essence, that's the main reasons. Those are the main reasons why we witnessed the drop. Fantastic opportunity to buy. It went as low as 9,800, 9,900 today. Fantastic opportunity to buy Bitcoin because you know that definitely before the end of the month, we'll probably be back to 12,000 or more. So fantastic opportunity to buy Bitcoin as we speak right now. It's currently bounced back to, I think, 10,000 or something, 10,004, but fantastic opportunity to buy nevertheless. In terms of other news, Iran is starting to mine Bitcoin on industrial scale. As I mentioned earlier on, both organizations, corporate organizations, and indeed sovereign entities are beginning to take what I would call the Bitcoin rush very seriously, and they're beginning to mine Bitcoin on a very large scale. There are corporate organizations that are getting acres of land to create high stability infrastructure and very fast supercomputers just to mine Bitcoin. I mean, it's not like they can increase the amount of Bitcoin left. They're probably just about 3 million Bitcoins left to be mined, but because of that finite supply, everybody's trying to, as much as possible, get a piece of the pie before the supply runs out. And because more and more people are getting to take Bitcoin seriously as a significant storage of value, so that's driving the demand to both mine and to accumulate Bitcoin. As you also know, if you live in Nigeria, there's a circular going around saying, people can't transact Naira for Bitcoin transactions without their account being shut down. It's an indication of a few things. One, the government recognizing that these things are going on. Two, as I said to somebody, that they're trying to block people from liberating themselves financially. So I told someone that, yeah, well, it's left to you. I told my younger brother that I've been screaming since last year that you need to, move into this space. That now foreign currency is getting more and more difficult to obtain, and now they want to block people from acquiring digital assets. So it's important development for the folks in Nigeria, living in Nigeria. You need to secure your bag. You need to secure your bag digitally. For obvious reasons, even the US dollar is going the way of the Venezuelan peso. Everything is devalued. They're pumping money at astronomical rates. It's inevitable that there will be a loss in value. So the same thing is happening for not only the Naira, it's happening for the US dollar as well. So in terms of market sentiment, there's risk aversion, and the stock market dip is also echoing in the cryptocurrency markets. And lastly, I understand that there are a lot of institutional investors that are waiting to buy at 8,000 USD, but I can see that there are quite a number that are already positioned for 10,000 as well. The way the prices have rebounded off 10,000, it's obvious that a lot of buying demand is sitting at 10,000. So from what I know and what I've seen so far, what we're likely to see in the month of September is a recovery of Bitcoin over the month, and then a redistribution of what I'll call money supply from Bitcoin to altcoins. So many people might not be aware of this, but just before the prices of Bitcoin starts going sky high in the last bull run, there was a redistribution such that Bitcoin dominance dropped to as low as, I think, 30%. Usually it sits at, since last year, it's been sitting at over 60%. It started to drop in the last 3 months. It's currently about 52% now. Is it 52? Yeah, so it should be about 52% now. So the more the dominance of Bitcoin drops, the more oil coins start to pump. One last thing I forgot to mention about the price drop this week was also the DeFi. I don't really want to call it DeFi, the Uniswap, the Uniswap and money pool craze. So for those already in the know, you know what I'm talking about. There is a new, not a new phenomenon, it's just a new coinage happening in the markets called DeFi. The same way you had ICOs back in 2017. DeFi is just another way of collecting people's tokens, to be honest, and Bitcoin. Especially the yams and the potatoes and the hot dogs of this world. The Ponzi, I don't want to use the word Ponzi scheme. They're like scams to take people's money from them in the name of high yield cryptocurrency investments. So as at end of last week, Uniswap, which was a newly launched DeFi exchange, had more market capitalization than Coinbase. I mean, that was absolutely insane. So that money being warehoused also affected the market capitalization overall and facilitated the drop in Bitcoins. On to other news. Bloomberg is saying we could have Bitcoin at 500K in the next 2 years. There was an analyst that commented that, well, he said that Bitcoin goes the way of 500K and equalizes the market capitalization of gold, or it becomes worthless. Have my money on matching up to gold. If you take a survey of millennials and ask them, what they would prefer to invest in, whether they want to invest in Bitcoin or they want to invest in gold, most likely the response you get is Bitcoin. And the reason is simple. Like I was saying in the video I tried to share with some of my friends, somebody was interviewing Akon the musician, and he was trying to explain the evolution of money using his musical career. And it tried to start from the age of cassettes, not cassettes, cartridges, then cartridges to vinyl. Vinyl is the record that we know in Nigeria. From the record vinyl to the cassettes, from the cassettes, we went to this disc, both CDs, Laserdisc, and then DVDs, then Blu-ray. Then from the disc, we went to MP3. From MP3, we went to streaming. So essentially, give that evolution to say that's the way music has evolved. That in the same way, we're gonna move from cowries and trading by barter, or we move from cowries and trading by barter to trading with precious metals and precious stones, now to trading with currency. And now we started from currency in paper currency and coins. Then we started using what's it called? Card. Then from card, we started using wire transfer, electronic transfer. And now from electronic transfer, we'll be moving to digital currency. So it was saying people need to be prepared mentally and position themselves accordingly to take an advantage of that situation. So it's important that we always keep our long-term view intact. And like I say many times, that institutional investors and institutions, they play the long game. They're not playing the short game of a day trader. No, they're playing the long game of 10 years, 15 years, 5 years. That's how they plot. Unfortunately, many people who try to day trade don't have the visibility of those long-term views of the market. When you see the long-term view of the market, it makes sense. Then you get a better grip. About 2 weeks ago, I was sharing a particular slide. I can't find that slide now. I changed my computers. Where I was showing the difference between the impact of the galaxies on the planetary system, then the impact of the planetary system on the Earth, and then the impact of the Earth and its rotation on our weather system. And I was trying to say that the macros always influence the micro and the day-to-day activity. So when you see the market jump 50% down or 30% up, don't get too excited. You need to take a step back and look at where the market had been 5 years ago, 2 years ago, 3 years ago, and see the overall trend, because then that tells you where the market is really going. All this up and down of volatilities that we'll see is usually what you call noise, or like the Yoruba people will say, Ariwoja. It's not the real substance of the market. It's just the vibrations. Let me use that word. of the market. It's not the real direction of the market. The real direction of the market is usually sitting outside what happens day to day, beyond what happens day to day, usually outside the daily charts, quote and unquote. We should expect Bitcoin to react strongly in the next 2 months before we have potentially another crash in November after the US election. I have my money on Trump. I don't want him to win, but I have my money on Trump to win. Either way, the market is going to crash anyway. If Trump wins, the market is going to crash because the market expects Trump to win. If Trump doesn't win, then the market will crash again. So either way, I mean, we should position to make some money. Like I told a friend of mine, if in the next 2 months you see that your account is going to 3x, 2x, 3x, you can take out some profit and have some fun. It's your money after all. You can take out, 50%, you can take out 1%, you can take out 20%, and have some fun. Or you can take out your original capital if you feel that, your market has swollen to a comfortable level. But you should be prepared for that. I must warn you that you might see some astronomical gains in the next 8 to 12 weeks. Also in the news, we have Binance talking about setting up their own decentralized or DeFi exchange. Basically, what they're trying to do is they're trying to compete with Uniswap. Let me sort of back down a bit for people who are just joining us. So, like you will have stockbroking exchanges, cryptocurrencies also have exchanges where people go to buy. But a new phenomenon in cryptocurrency is what you call decentralized finance. And off the back of that, you have decentralized exchanges. What really happens with decentralized exchanges is that, sorry, Yoruba is my first language. So the explanations always come to me, my mind in Yoruba, like an Ojo Olomo to sort of arrangement where nobody sees anybody, but the funds are made available. The buyer and the seller, they're able to connect themselves and they're able to carry out their transaction. It's like operating in the black markets, only that it's not a black market really, but it's very similar to that. It's not entirely anonymous. It's just that you have complete control. What do I mean? The advent of blockchain and cryptocurrencies say that you have control of your money, meaning I can keep all my Bitcoins or my cryptocurrencies in my personal offline wallet, and I can control when I send it out and when I bring it in. Or I can go and put it somewhere for it to generate more income for me. In DeFi, what you do is you connect that personal wallet of yours to a decentralized exchange. So the decentralized exchange connects to your wallet. Then you initiate a transaction from your wallet saying, I want to use 1 Ethereum to buy 2 sushis or any of this DeFi coin. And then if there is liquidity pool for that cryptocurrency, you get the price immediately. You see the price feed immediately to show how much 1 Ethereum can buy of that particular token. And then you buy, and then it automatically is transferred to your wallet. So that's one of the applications of that. There's a huge application of DeFi, and I talked about DeFi for most of the month of August. I'll probably revisit it again sometimes in the coming weeks. But that's one of the applications of DeFi, which is decentralized finance. So what has now happened is that's how I give an opportunity for a lot of people to create tokens without any quote unquote governance and visibility. And because some of them have very low circulating supply, the price gains are very rapid. And because people are looking to make sharp gains before the original bull run, a lot of people are pumping money into it. So by the end of last week, as I said, Uniswap, which was one of the new decentralized exchanges, had up to $1 billion US in capitalization. So that's what's informing what Binance is doing now. Binance is trying to partake in that market. Of Uniswap, we've had what you call Sushi, which is a decentralized token. You have what you call Sushi Swap. Basically, Sushi Swap is copy and paste of the code of Uniswap, and then they've changed the incentive to say that if you provide liquidity, instead of you getting paid in Ethereum, you get paid in their own Sushi coin or Sushi token. So Binance is going for DeFi. They want to launch their own swap, basically to dilute that market and get some market share. Lastly, on the news, Bank of England governor, he's been in the news a number of times for cryptocurrencies, but recently he was talking about the need to have regulators involved in the issuance of stable coins. He also said that Bitcoin was not suitable for payments, and because of that, stablecoin seemed to be more appropriate and more nimble way of facilitating cross-border payments. While I agree with him to an extent, um, I'm not sure. I'm not sure to which extent the government is able to hold that, because many of the companies that are issuing stable coins, they're in offshore entities like Bermuda and Cayman Islands, like of places where the hands of U.S. government and U.K. government cannot reach them. But I get what he's saying. They're trying to get a piece of the pie as governments, and trying to get some semblance of control. But it's an acknowledgement of what's already on ground, which is this new era of digital assets. So that's basically what I want to talk about in terms of the news. In terms of our crypto vital signs, yeah, I'll talk about what we know of our crypto markets. And the reason I always show this chart is just to explain to you how big the crypto market is relative to the US equities market. US equities market is always ranging between 35 and 37 trillion dollars. And the crypto market is always ranging between 200 and 300, or yeah, 300 plus billion dollars. And the altcoin market is usually dangling around half of that. Now, what we likely to see in this coming bull run is this 300 billion, which has reduced, it reduced from last week by about, I think about 4 billion, 5 billion, can't remember. But it's reduced from what it was last week. Same with the altcoins. And then, obviously, because a lot of funds have been taken out of the market, probably about 40 billion over the last 3 weeks have been taken out of the market. And some of them are locked up in the DeFi black markets, quote and unquote. But what's happening is, for us to enter this bull run, two things need to happen. The dominance of Bitcoin needs to shift from the current 50 something percent to about 40-30%. And then all the funds will go into altcoins. Then you have market capitalization start to go up to like 500, 600 billion. And then you know that we're fully establishing bull run. In terms of my own market projection, I think, as I said, this month and next month we'll recover from this dip, probably break through the 12,500 cap and probably go to sit between 14 and 16,000 before the US election. Then we expect to have a drop around that time again before the market picks up, either in December or January next year. But definitely, I mean, given what we know now of the advent of Corona and how it's fared this year, we're likely to see the full-blown crypto bull run in 2021. So if you're already in position, congratulations. I mean, hold your positions. That's all I can say. If you're not in position yet, it's a good time to buy because Bitcoin just crashed. So it's a good time to actually get into the market. For those people who already have, what we call our gemstone tokens, congratulations, because many of them have actually gained on Bitcoin. So if you check their Satoshi values in the recent days, you see that they've gained in Satoshi value, even though the fiat value like pounds or US dollars might not have gained in the last few days. But a lot of them have made significant gains in Satoshis, which is a very good thing, because eventually when the price of Bitcoin goes up, you now see the beauty of the price appreciation of those coins. A good example is our dear CRO. CRO used to be in the range of 1,300 sats. Before the crash, before yesterday, it was sitting over 1,500. So by the time the market fully recovers, you see how much it has actually gained when the price of Bitcoin goes back up. So that's that for market capitalization comparison. Next is our daily our technical analysis. As you know, we were saying then that the market has the probability of either staying sideways or breaking down. So as at the beginning of September, this is September Yeah, that was September 1. So as September 1, the market attempted to break through what you call the short-term moving average, and then broke through the lower part of this channel. And once that happened, it was imminent that there was going to be a drop. The question was, how deep was the drop going to be? Well, we've seen for a good while what the drop is. So we have two things. We have a cross between the short term and the medium term moving average, which means the bias change completely from buy to neutral, then it changed from neutral to sell when it was totally below this channel. And that's what you have here. Fortunately or unfortunately, the longest time moving average, which is the 200 simple moving average, is serving as a resistance, or sorry, support at this point, and that's why the price is bouncing off this level. If you take a deeper look at what's happening on the hourly chart, you'll see that the market tried to test 9,900 and it's bounced back sharply. If you look at the wicks of these candles, the one sitting where my arrow, my cursor is, you find out that the market is clearing that line completely, meaning that a lot of buying demand is sitting at that price point, which is about 10,001, 10,002. So the market is completely clearing it completely. Every time it's touched 10,000, the market clears it. And the same thing has happened again today. And that's why you've seen those long wicks going down. In the short term, I expect we'll have a resistance here at around 10,700, then another one at around 11,000, 11,000, 11,000 to 11,006 before it considers going back to 12,000. But all of that can happen within the next 1 week or within the next 2 weeks. But we'll see how it goes. Next, I talk about the psychology of market cycle. And I always try to bring this up so that we keep ourselves in perspective and we're able to appreciate context. I like to talk about context a lot because context is everything. If you get lost or you miss the context of anything, then the interpretation of every other thing is meaningless. So you need to understand the context for the investment you're making. In the same way, if someone wants to buy a house, you don't want to buy a house at the peak of the housing market. Why? You're going to be paying so much more for something you could get for so much less. So in the same way, you don't want to buy a security when there is euphoria. And that's why I talk about, hope and disbelief, optimism, belief, thrill, euphoria. By euphoria, the market is overbought. Everybody is, even the Schumacher is talking about the stock or the cryptocurrency. By that time, you should be selling and waiting on the side for when people will get complacent and the market will crash on them. Like I usually say, be bold when everybody's fearful and be fearful when everybody's excited. The reason is that when everybody's excited, which is this area of the market cycle, you are at the point of the maximum financial risk. That's the truth. Across board, across any form of securities or assets. When everybody is euphoric about it, you are at the point of maximum financial risk. For the cryptocurrency market, is actually it's much more beautiful, in my opinion, than both stock and forex market because the market cycle is defined by Bitcoin halving, which I'll talk about later for the benefit of those just joining. And because of that, we almost invariably know and can calculate with fair degree of accuracy how long the market cycle will be. So because of that, for instance, we know now that we're in a bull run till at least July next year. Market will always go up for Bitcoin, at least July next year. Regardless of what happens in the world, it's guaranteed that we're going to have that because that's what has happened and that's how the market has behaved in the past. And because nobody has control over the Bitcoin halving, so nobody's able to determine that, Bitcoin halving is not going to happen. It's automatic. And that's why the market cycle is where it is. So we need to keep ourselves real and say, we're still here. We're still at the level of the bottom of the hill for optimism here. For some people, it's already here. It's already belief, but we're still here. So as I always say, anyone getting in now, it's still a good buy. Some of us got in when we were here around hope of possible recovery. And of course, we'll be out. By the time we are here, we'll already be out of the markets. So it's important to keep that perspective, your eyes on the long term, and understand that you need to have an exit strategy on that long term. So I think I'll have to have a special session for that particular topic on exit strategy. Let's move to other things. Other sentiment analysis, and this is our sentiment index for Bitcoin. When sentiment or overconfidence index is sitting around this place, you know that it is time to exit the market. For Bitcoin, it's currently sitting around 0, so we're still good. Yeah, and this is a year-on-year analysis. So currently we're good because we're dangling around 0 and 2. And there are enough things that feeds into this, but it's a very good indicator of what the institutional investors are looking at. And you have this greed and fear index. You know, I show this every week. And last week was 74. The week before that was 78, which was extreme greed. And, you know, was saying that everybody's ecstatic to be in the market, and it should be a good time, probably a good time to exit the market or just hold your position, because the market might correct itself. And that's what has happened. So now we've dropped from 74, 79 to 40. Now is a good time to buy when everybody is afraid. If you have that mentality, you always make money. Across board, you always make money. So next, Crypto Drip, I'm just going to do a recap on this week's Crypto Drip on why we're into cryptocurrency. So for those just joining us, a brief recap on my journey into cryptocurrencies. I'm an IT consultant by profession. I was originally a doctor by training, but I started trading Bitcoin. I tried trading cryptocurrencies about 2017, but I started trading Forex about almost 13 years ago. And through Forex, I learned a lot about the securities markets and how, you know, the markets behave, price action, sentiment, fundamental analysis, technical analysis, trading psychology, and all the works. And then last year, I found out that, okay, this Bitcoin I'm talking about is actually a lot similar to what we have in currency markets. And it's actually a lot easier, to be honest, because for the currency markets, for the most part, you don't have the opportunity of trading your own assets wholly. You are usually margin trading, meaning you're using your assets as security with the broker. And to a good extent, that also works in the stock market as well. Where you do margin trading, you use your own funds to secure the trading position, which means if you're leveraged to the scale of 1 to 10, you can, with 1,000 pounds, take a position of 10,000 pounds. What that means is if the market goes well, your 1,000 pounds can very quickly become 2,000 pounds. But if the market goes, you know, the other way, it can be wiped out completely. And yeah, that's usually the story for, especially Forex trade. So yeah, I made a lot of money, to be honest, trading Forex, but I also lost huge amounts of money. And that's the general story. Even I was listening to an interview before I decided this call, and the guy used to be a hedge fund trader on Wall Street for 35 years. And he was saying nobody is able to beat the market consistently year on year. That even hedge funds, that they don't do it more than 2 or 3 years in back to back. That's so he doesn't understand. He was trying to criticize somebody else. That he doesn't understand why the person feels that, you know, what they are doing is the, you know, ultimate. But that goes to tell you the dynamics of the market. But the only difference here for Bitcoin is now we still don't have the involvement of, you know, the very big investors. The money is starting to come in, but it's not fully in yet. When it's fully in, the market capitalization we see today at 3 billion, we'll be talking in trillions. People are already saying 5 to 10 trillion. Imagine, 5 to 10 trillion. In fact, let's just forget 10 trillion. Let's say 5 trillion. 5 trillion is times 10 plus or times 12 of the market capitalization of today's markets. If that happens in the next 5 years, your $100 or £100 worth of Ethereum may be as well worth 100,000. Because if you took £1, $1 of Bitcoin at the beginning of the decade and cashed out at the end of last decade, you will have made almost $100,000 on just $1 worth of Bitcoin at the beginning of the decade. Or if you invested $1 in Bitcoin. So it's important to know that the excitement about Bitcoin is not just because it's another investment in security. It's because there's about to be a massive, monumental shift in the way money is being handled. There's going to be a massive shift in the financial market. There's a massive shift in the way we begin to accept and receive value. That's why we're making all this noise that we're making about Bitcoin. Many people think it's just around the halving, that okay, because the halving is happening every year. That's just one part of the story. The bigger story is that the same way the internet was nowhere before 1995, it's the same way crypto markets was nowhere before 2020. From 2020 onwards, when we look back 5-10 years down the line, people will say, wow, that was the best opportunity, or that was one of the greatest opportunities I've gotten on the market, because at that time, the market capitalization was so small. In 95, before Netscape did their IPO, nobody was using the internet for business. Nobody even realized you could use the internet for business. People were posting cats and dogs and private selfies on the internet. That was what the internet was used for. Until Netscape came and created a user-friendly browser and started talking about concept of e-commerce, that people started realizing that, oh, we could actually use this thing for business. Now, think about that time. Netscape went from 0 to 1 billion in weeks. And since that time, we've created a multi-billion, multi-trillion dollar industry. I mean, where was Apple before the internet? So in the same way, the blockchain technology and its derivatives and attributes like Bitcoin and all that cryptocurrencies have come to change significantly how we transact value. In fact, I can boldly say that in the future, internet as we know it will no longer be internet, because internet then will be run through blockchain. And what it then means is that every other thing that we know or that we currently know will not be the way it is. So we already know that money is not going to be the way it is. People are already talking about tokenizing real estate. They're talking about keeping titles on blockchain. If you keep your title on blockchain, nobody can steal it because it's immutable. People are already talking about keeping wills, keeping generational wealth in blockchains and creating blockchains for this kind of things. So it's beyond just the fiduciary aspect of it or just the monetary aspect of it. It's a shift in a total paradigm, and that's why it's important that whatever you do, keep your eye on the long term. 5 to 10 years time from now, you will see that this was just the very beginning of the blockchain revolution. So the Bitcoin halving happens every 4 years, as I've earlier explained, and it's basically a mechanism that's been designed by the anonymous creators of Bitcoin to reduce production every 4 years, and it's a counter-inflationary measure as well. But what happens is each time that supply drops, the price goes up. Now, we expected the price to go up, for Bitcoin, maybe to say 1,000% after this halving. But what has made this particular one very interesting is because before now, the institutions were not looking at the way of Bitcoin. People did not consider Bitcoin as a storage of value or as an asset up until 2017. After the 2017 bull run was when institutions started taking Bitcoin seriously. And what has now happened is that most governments are already positioned to put legislation in place for people. In fact, the US government already have it on their tax return form to say, did you trade cryptocurrency last year? They already want to start collecting tax from people, even though they don't have the full framework. They've given enough regulatory inputs into the usage of blockchain. So as I said about 2 weeks ago, that they were giving banks, they sent the banks a memo that they can store cryptocurrency on behalf of their customers as assets. Then after that, they sent another one to say that banks stock exchanges can actually offer cryptocurrencies. The only thing that's not happened is that has not come into effect. In Europe, it's already in effect. The German stock exchange, the Austrian stock exchange, the Sweden stock exchange all have given permission to their regulators to they give permission to their regulators to allow them to sell cryptocurrencies to customers. So even though they're not selling cryptocurrencies to customers, just to mention that, they are exposing customers to the price. So they will create derivatives that exposes customers to the price. And that is the juice of it, because once they create derivatives, is people will start getting interested in the actual asset itself. And then it's going to create the boom we're talking about in cryptocurrency. So people always ask me that, quick 6 steps to get involved. One of them is you get it yourself a wallet. There's so many ways to get a wallet. If you need to get a wallet, I can hit you up, send me a DM, or send me a chat message if you're on Zoom, send me a DM if you're on Instagram. I can give you an advice separately on what kind of wallets you have. Open an account. You can buy crypto. If you need to buy crypto, I can give you a link to download the app that makes it very easy for you to buy. And then you can keep and just watch your asset grow. Yeah, I think I'm going to stop here. Yeah, I'm going to stop here so that I can make room for question and answers. So I have question from Wingoni Fadi saying, do you think Bitcoin will hit 500K in 2 years? Absolutely possible. Absolutely possible. There are so many metrics that people use to gauge the extent of Bitcoin price. So what's his name? This Kessler report. There's this guy Kessler, the old Wall Street guy. He says he believes Bitcoin is going to reach 400K. Another guy says he believes Bitcoin will reach 500K. Some people say, well, the free Bitcoin is going to get to 1 million. All of that's completely on the table, because you need to factor in that a number of things have happened to the US dollar. And I've mentioned that in previous Zoom calls. One, the US dollar at the beginning of January had lost 97% of its value, meaning it's only worth 3% of the original value. Then the US dollar is no longer the only reserve currency for the World Bank. The World Bank has adopted the Chinese yuan and has also adopted gold as an auxiliary asset, which was never before December 2019. So because of that, and because of this COVID wala that we found ourselves, we now have a severe dilution of money supply, meaning US dollar. The US dollar is going to weaken more. We might not see the effect of that inflation play out until early next year. I think the market is going to go through some crazy all-time high, the stock market especially, before it crashes wickedly. Because the stock market has been on steroids for the last few months, and it's been hitting, S&P has been breaking through all-time highs anyhow. And even the individual stocks have been going crazy. And like somebody said, it looks like people are partying like 99 before the Y2K crash. So I expect that the market crash fueled by the devaluation of the dollar will further fuel the increase in value of Bitcoin, because you can only have 24 million Bitcoins, and you already issued 18 million plus. So because people know that is not going to change, I would rather want to keep my money in something I know that it's not going to change, than keep my money in a currency that I'm getting negative interest, keeping it in the bank, and it's not going to grow. So because of that, I expect at the minimum Bitcoin to do 100,000 all-time high in the next 16 months max. If the bull run is sustained, and what I mean is a big if the bull run is sustained, meaning that if the initial splurge induces more interest from institutions, then we might not really have a bear market till the next halving. And in that case, 500K is very easily attainable. Bearing in mind that we only have 2023, what am I saying? Yeah, we only have 2022 in between now and the next halving. The next halving is in 2023, towards the end of 2023. So we only have 2022 in between. So if the bull run is way more sustained, which all the indications on the table are saying it might be a more sustained bull run, 500K is easily attainable. The second question was, what's the relationship between stocks and crypto? Well, before, crypto was standing on its own, jejely, as they say, and it never used to react to any movement in stock market until the Wall Street guys went to lobby the US government to give them permission to trade crypto and to offer cryptos to their customers. When the US government did that in Q3 last year, end of Q3 last year, institutional money started coming into crypto. And that institutional money that started coming into crypto is what is now playing out. And what also happened is that when they started creating institutional money, pumping institutional money into crypto, they also started creating derivatives. So if you go on exchanges like Bittrex and BitMEX and Binance, for instance, you see things like Bitcoin Hedge or Bitcoin Bear or Bitcoin Bull. Those are not Bitcoin themselves. They're just derivative assets that people trade against and use in margin trading. So that influx of institutional money has now made it possible for stock market to affect Bitcoin. And that's what's happening. So when the stock market crashed and gold crashed in March, cryptos also crashed. Same thing has happened this week. When the stock market crashed, cryptos also crashed because crypto is more liquid. Let me put it that way. Crypto is more liquid than the stock markets. And the stock investors know that, the institutional investors know that. So if they have a losing position in the stock markets, before their losing position kicks in, they take out their money in crypto and use it as a hedge. If you trade stock market, you know what I'm saying. If you don't close out your position and you have enough money to back up your position, then you don't need to close out at a loss. So they take the money out of crypto to use that as a hedge for the stock market. And then when the stock market rebounds, they return the money back. So they hold their position and they still don't lose when the market reverts. So that's the relationship between stock market and crypto. Any further questions? Quite a number of people on Instagram today. Mr. Corpus, I see you. Chief Dan, I see you. Measy7676, I see you as well. Any other question, please, before we call it a wrap? Somebody's. Inka, do you have a question? Okay, looks like we're good. So thank you, everyone. We'll see you again. Okay, somebody says he has a question. Please, if you have a question, please unmute yourself.
Hello?
Yeah, I can hear you.
Hi. I just really wanted to clarify because I think, I think a lot of people would hear on the side of caution with regards to crypto just because of the perception. Are you able to shed some light in it? Because I feel people just sort of assume crypto is some Ponzi, it's a Ponzi scheme. And I've never really been able to understand why people make that assumption, because you could argue the same thing for the stock market as well. So do you know why that's the perception?
Yeah.
Can you shed some light on that?
Yeah. Thanks for that question, Nika. So yeah, the thing that happened with crypto was that because it's entirely built on a novel technology, nobody knows about these technologies before now. So in the last bull run, which is 2017, pre-2017, in 2016, if you talk to people about Bitcoin, people didn't really understand what you were saying. And people didn't know what it meant when you talk about Bitcoin. But because some techie guys and some people who saw the potential back then saw a way to piggyback on it and shaft people out of their hard-earned money, they started creating schemes, calling it cryptocurrency investments, and they started, basically shelling people out of their money. I personally was not, I was not involved in the last bull run like that, so I wasn't, part of all that investment that people are getting into. But what was happening then was that because people saw that the price of Bitcoin was appreciating, they started creating companies, creating shell schemes and pyramid structures, and calling it Bitcoin investments, all sort of Bitcoin stuff, just because the price of Bitcoin was appreciating rapidly. And for the most people, that was their first exposure to cryptocurrencies. And that was their only exposure. And because it was so difficult then, one, to buy, two, to move around, three, to convert. So fungibility was a problem. Ramp on and ramp off, ramp down was a problem. So ramp on meaning how do you get on cryptocurrencies, and ramp down meaning how do you get off cryptocurrencies. It was a major problem then because there were really very few exchanges that were providing cryptocurrency services, and they were providing it at breakneck costs. So that, in addition to all the terrible schemes that were created by all sorts of fraudsters to shaft people out of their money, gave cryptocurrency a bad name. So in fact, most of what people called cryptocurrency was not cryptocurrency at all. They were just schemes, leading to cryptocurrencies, because everybody just felt once you can mention blockchain, Ethereum, and put it in your scheme, people will believe you that it was a valuable form of investment. And because the price of Bitcoin was going up, people felt they were investing in cryptocurrencies. So for the most part, 80% of the investment vehicles on the market back then, they were just Ponzi schemes. They were scams, outright scams, shafting people out of their money. Now, because people had that kind of experience, if I heard about a case, I was in the UK then, about a case called OneCoin, where the lady made billions of pounds from guys in the UK. Had nothing, they had not one code on, in fact, what am I saying? I'm not even talking blockchain. They had not one code of token on any blockchain, or not even on Ethereum. Nothing. They had nothing on the cryptocurrency framework itself. Meanwhile, they are presenting themselves as cryptocurrency investment. So a lot of people lost money. I was talking to him. I was talking to my lawyer. He said, man, like he had one of his friends that went to sell his house or something to invest in that stuff, and it got completely wiped out. And then there was no regulation, so the government didn't even have any visibility of what was going on. People just knew that Bitcoin price was going up, and all sorts of people are coming up with investment opportunities in Bitcoin, and then everything was being wiped out in a second. Guys on Zoom, guys on Instagram, I have about 2 minutes left, and I'm going to stop after that. So what's happened is that has given cryptocurrency a lot of bad name. But what has happened is, since the 2018 bear market, institutions have now gotten into crypto. There's a lot of compliance issues now. There's a lot of regulation in place. There's a lot of known companies who are actually doing crypto business that are regulated in the UK, regulated in Europe, regulated in America, in the Americas, regulated in Australia, regulated in Asia. That quite a number of them that can give you that, they have legit business, and they're now, doing proper crypto investment. So in fact, I would say that crypto is actually more, the real crypto investment is actually a better investment than stock, because most of the stock is margin trading and derivatives. But for crypto, if you really buy a true crypto asset, it's a non-perishable good, like one of my friends would say. It's like landed property. And if you've been following us, you know the issue of China and Korea making cryptos balance sheet item, meaning they are transferable as assets and as inheritances. So those are the things that have given cryptocurrency a bad name. But I think in the coming decade, you might not even know stock market as we know it. All stocks might eventually be traded through cryptocurrency and through digital assets, because cryptocurrency is an offshoot of blockchain. And if you actually traded stock on blockchain, it will have been a more effective instrument than what it is today. So for guys on Instagram, this is going to go off now. You can join us on Zoom. I think the Zoom meeting stuff should be there. Yeah, it's
Yeah,
the video is not
Dr.
on.
Demi,
Yes, sir. Your question.
thank you very much for the presentation. I just want to ask, if one wants to maybe store like Ethereum for long, do you advise one uses blockchain, or where can one keep such?
So, a number of things.
I'm thinking of 10 years, 5, 10 years. One just want to store. As advisable that is safe.
Safe is a relative.
Yeah,
Safe.
like I'm thinking of Binance, but anything can happen to any of these exchanges.
Yeah, in fairness, anything can happen to anyone. But what I would say is that most of the exchanges have blockchain accounts. People like Binance, it's going to be very difficult for people like Binance to just disappear, because Binance is now, they have insurance, they're regulated,
Okay.
quite a number of things going on. Same thing with Crypto.com. Crypto.com is regulated in 6 entities, in 6 various, they're regulated in Australia, they're regulated in Singapore, in South Asia, in Europe, they're regulated in UK, they're regulated in US and Canada.
Okay.
So and I mean, they've gone through all sorts of compliance certifications as well. So for most of those guys, it's a bit difficult for them to just fizzle out. They're now like banks. And as a matter of fact, Crypto.com is actually operating like a bank. What Crypto.com is offering is to transfer everything that your bank is offering you today, to transfer it to them. So with your crypto assets, you can take a loan against your assets from them at, I think it's 8% APR, at a loan to value ratio of 50% currently. And you can use that without spending your asset and pay back. So, and you can use their card, as you're probably aware that for people in Europe, you can use the card to spend like a normal, like a normal Visa card. You can get into fixed deposits like the crypto earn. So that they are essentially operating as banks. It's just that they're a step ahead of traditional banks. So for them, I think they'll probably be around for a long time. Same thing with Binance. If you want to keep for the long term, I'll say you stick with them. You can stick with people like Bittrex, Binance, and Crypto.com. I'm watching my words very carefully, because I don't want to be quoted, but those are guys, those are platforms I think they have a serious long-term perspective, and they're not just mushroom exchanges. Because what's the use if you keep your Ethereum with your Ethereum, my Ethereum wallet? You can keep it in your my Ethereum wallet and write out your passcode and store it in some vaults. Your Ethereum will be there, nothing will happen to it, quite all right. But it's not making money. The only gains you will have will be the capital gains on the appreciation of the price of Ethereum. But if you want to stake it, you're not only making capital gains in terms of the appreciation of the value of the token, you're also making an accrual. You're making an accrual. So, like I gave you an example, that example that I gave, I don't know how many days ago, when I said, about some weeks ago, when I said my first Crypto.com's CRO investment was £355, and it got me 10,000 tokens. I invested those 10,000 tokens for a 3-month tenure at 14%, which is like 14% APR, which is like 1.2% per month. At the end of that 3 months, the price of CRO had gone from 3.5p to 12p. So my capital gains was 200% or 300%. Then I had 400 additional CRO gained as accrual. So if I kept that CRO in my wallet, it's not doing anything for me. You get what I mean?
Okay. Yeah, I can hear you.
Yeah, so
I can hear you.
That's my position. For long-term investment, it's better to stake it. And many of those platforms are already taking that.
Exchanges.
They're already feeling
Binance
that.
is doing it.
Yeah, because they realize that people also want to, keep their assets for a long period of time.
Thank you.
No problem, sir. The great Wales of Wales. I can see your mic is on.
Yeah. I just wanted to say I have a question that is pending on your DM.
Oh, okay. That question. I'm actually trying to, I'm trying to arrive at a pricing point that is not too, it's not too overbearing.
Yeah. Whenever you are ready, just
Yeah.
a reminder.
Yeah, I'll get back to you later in the week. So just
Okay.
for the benefit of the others, I'm having a subscription service for people just to give you people instruction on, what asset I think they should buy when. For a monthly subscription, I'm yet to agree at to finalize what the price would be, but I don't think it should be something very significant especially for guys in the UK. But it's just a form of a service that help people to just not worry themselves, but just take positions. And if you need to sell, I will advise you that okay, you might want to take out some profit at this point. So I'll get back to you if you're interested in such a service. Get in touch with me as well. So I don't know if you have any other question.
Thank you.
Your mic is on.
That must be a slip of finger. We are doing well.
Okay, thank you very much. I don't know if you have any other questions before we close out for the day. Okay, no other questions. Thank you, everybody. See you again next week. If you have any questions, just send me a DM. I'll be happy to clarify. Have a nice weekend.
Thank you.
Thank you, sir. Samaz.
Thank you, Doctor.
Oh,
Thanks for the presentation, Doctor. Thanks. Bye-bye.
Bye.
Bye.
Thank you,
Gareth.
Chairman. You know, this is anyway, we will talk in camera. Thank you.
Yes, you need to be coming down.
I beg. Let me just go from this side. We will talk in person. No, Allah. Thanks.
All right.
Yeah.
Ogawale, egbeja mi wa o.
Ìgbà ìlàrọ̀.
Ṣọ́gà wálé lẹ́lẹ́jà ni.